Hello everyone, welcome back to my channel, Living in My Own World. Professor Lokeshwari CK. In this video, we are going to learn basic accounting terms explained with simple and easy examples. This lesson is useful for beginners, class 11 and 12, commerce students. If your basics are clear, accountancy will become very easy. So let's begin. Basic accounting terms. The first very basic accounting term is business. A business is any activity carried out to earn profit by producing or providing goods or services. Let us check an example for this. Ravi opens a stationery shop to sell books and pens. Since he is doing this to earn profit, it is called business. Can be anything, shop, factory, or any service company. Next is transaction. Transaction is a financial event that can be measured in money and affects the business. Let us check an example with Ravi. Ravi buys books for 5,000 rupees or pays salary to worker because money is involved. These activities are called transactions. Next, it is assets. Assets are nothing but the properties or resources which is owned by business. There are types of accounts. Mainly, it has been categorized into two. First one is current assets. Second is fixed assets. Okay. So, when it comes to assets, the examples are cash, stock can be current assets, land and building which are immovable are called fixed assets. Next is capital. Capital is the amount invested by the owner into the business. For example, Ravi invests 1 lakh rupees to start the shop. This amount is called capital because he is the owner and he is investing 1 lakh rupees into the business. Next, we have drawings. Drawings are goods or cash withdrawn by the owner for personal use. Effect reduces capital because Ravi has invested 1 lakh rupee into his business, right? So now Ravi takes 2,000 rupees from the shop to pay his home electricity bill. So this is drawings and it reduces capital. Let us move on to next. Next, it is about liabilities. Liabilities are amounts payable by the business to others. For example, Ravi takes a loan of 50,000 rupees from the bank. Since this amount has to be repaid, it is a liability. Got? So, examples, loan or creditors. Now, let us understand about goods. Goods are items purchased or produced for resale. For example, pens and notebooks bought to sell in the shop are called goods, or else any of the item which has been purchased for reselling purpose. So that can be considered as goods. A trader buying mobiles to sell. So those mobiles can also be called as goods. Got? Next, it is about purchases. Purchases refers to buying of goods for resale. For example, Ravi buys books worth 10,000 rupees from a wholesaler. So this is called purchases. In purchases, there are two types of purchases. cash purchases, then credit purchases. So, if you are purchasing by paying cash, in that case, it is called as cash purchases. If you are paying later, then it is considered as credit purchases. Next, it is about sales. So, when it comes to sales, it refers to selling of goods. Here you can see the types of sales: cash sales and credit sales. If you are selling a goods, in return you are going to receive the amount, right? So if you are selling a goods, in return if you are receiving a cash, then it is called as cash sales. If you are selling a goods and later if you are receiving a amount on that, then it might be called as credit sales. Got? Next, it is about stock. Stock means goods lying unsold. For example, some books are still left unsold in the shop. So these unsold goods are called stock. Here you can see types of stock: opening stock and closing stock. Next, it is about debtors. Debtors are persons who owe money to the business. Example, a customer buys goods worth 2000 rupees and promises to pay later. So, that customer is called a debtor. Next, let us check the meaning of creditor. Creditors are persons to whom the business owes money. For example, Ravi buys goods from a supplier and he will pay that amount in next month. So that supplier is called a creditor. So he is nothing but the supplier who sell goods on credit basis. Now let us understand expenses. Expenses are costs incurred to earn revenue. For example, rent, salary, electricity bill, which is paid for running the shop or running the business. So, these are the expenses which are bared for the purpose of making business. So, this is called as expenses. Got? Next, it is about income. What is income? Income is money earned by the business. For example, Ravi earns commission by allowing advertisements in shop. So this money received is called income. For example, commission received, interest received. Then next term is profit. Profit is equal to income minus expenses. When does this profit occurs? It occurs when income is more than expenses, right? If income is 20,000 rupees and expenses are 15,000 rupees, the business has earned a profit of 5,000 rupees. So that amount is considered as profit. Finally, we are on loss. Loss is expenses minus income. When does this loss occurs? Loss occurs when expenses are more than income, right? For example, if income is 10,000 rupees and expenses are 15,000 rupees, the business suffers a loss of 5,000 rupees here. So that 5,000 amount is considered as loss. So today you have learned the important basic terms with simple examples, right? Remember, strong basic make accountancy easy. If this video helped you, please like, comment, subscribe to my channel. Thank you for watching and see you in the next video.